Good morning, Carl. I am joined by Chicago Fed President Austin Goolsbee on this day that the jobs report came out. Good morning, Austin.
Hey, Steve. How are you?
I'm doing well. Sorry we can't be together, have you in studio so you can get roughed up here, but we'll take it as we can. Tell me, the jobs report came out today. A couple mixed signals in there. You had higher wages, strong wage gains, but also a trajectory of lower job gains. How do you process this, especially when it comes to your outlook for inflation?
Well, Steve, we've always said for all the years we've been talking about the jobs numbers, they're plus or minus 130,000 on the jobs number, just in terms of margin for error. So you never make too much out of any one month. If you take a step back, it's clear the job market is still very strong, but is cooling. If you look at the ratios of vacancies to the number of unemployed workers, for example, it's definitely coming down. That we're getting to a more sustainable pace, which is what we need to do for inflation. Now, you know, I would at least give people a caution in taking wage data as if it's a leading indicator of where inflation is going to go, because historically it's been the opposite. It's a lagging indicator of inflation. Prices move first and then wages. So I think overall the job market is outstanding and is getting back to a balanced, sustainable level.
But at 200,000, isn't it double the growth of the population? And doesn't it suggest that there was the Bernanke-Blanchard paper that suggested, hey, wage gains weren't a big part of inflation in the past, but they will likely be in the future. Does that cause you concern?
Always. Your job at the Fed is to be concerned about everything. And so, yes, there's some concerns. The thing I will point out is 200,000 jobs, if you just look at the number of bodies, is a big number. But the trend over some number of months has been the hours worked going down. So the total hours worked in the economy is not up as much as the total number of jobs. So we just got to be a little careful concluding too much from any 1 month's number.
Take a step back for us, Austin. Give us your overall view of the economy. We keep waiting for this recession. I call it the Godot recession. It hasn't come. We keep waiting for it. And the forecasters keep pushing ahead the time when they think it's going to happen. Is this economy headed for a recession? Do you see it slowing down right now sufficiently to allay inflation concerns?
Well, the premise of that question is that we would need a recession to eliminate inflation concerns. I don't think that. There have been leading economists that said we'd have to have the unemployment rate go to 7.5% for 3 years to get inflation down. I think this was a very strange business cycle, and what the Fed's overriding goal right now is to get inflation down. We are going to succeed at it, and to do that without a recession would be a triumph. And that's the golden path, and I feel like we're on that golden path. So I hope we keep putting off the recession to forever. Let's never have a recession again. I'm sure someday there will be a recession. But the fact is that the Fed's has a by law mandate, as you know, to stabilize prices and maximize employment. And coming out of COVID, that was a weird business cycle, so we can have a weird recovery. And by weird, I mean we can get the unemployment rate that will not in a recession level and still get prices down. We've partly done that. We got to do more.